Hi, this is Joseph. In this video, I'm going to quickly walk you through another trade that's set up today. So today is Wednesday. It's January 6th, 2021. And the question that I received, it was a private message in the Facebook group. I had posted a video on the pound dollar trade that resulted in about 70 pips profit. A couple of different ways that you could trade it with these targets, and I was briefly walking through the step-by-step procedure that I follow to confirm a top or some kind of a turning point, whether it's a top or a bottom, same basic procedure, and then pinpointing my entry on the point and figure chart. So the private message that I received was, does it work for the euro dollar? Can you do this with the euro dollar? But there are some differences here, and I'm going to share them with you because I want to get you all to start using point and figure. That's my mission here in 2021, is to get everybody to start using point and figure for their entries and their take profit levels. But then I also want to teach you how to use volume and how to find these turning points that I think are much better trading opportunities, because if you do this correctly, you're not as likely to sit and wait and wait and wait when price is moving inside a consolidation. When you don't understand these concepts, very often you're likely to sit there and wait for the trade and not know when it's going to happen. I used to do that quite a bit. When I first started trading, I didn't know when things were going to take off. By learning how to count these waves the way I teach in the coaching program, and then learning how to use volume. So let's just jump right into the mechanics here and what I'm doing with this setup here. This is the euro. Now, this is the euro 1 hour time frame. And you remember in the pound dollar trade, I was talking about the up move that was unfolding prior to the London Open. The London Open, if I'm going to day trade, is a time frame that I want to be paying attention to. Now, this happened prior to the London Open. This red candle right there is the London Open. That's the first 1 hour candle on the euro dollar or the euro futures at the London Open. So I see this move, and this happens pretty often. It doesn't happen every single time, so I wouldn't say that this is one of the criteria, but we do know that price can move around, whether it's to the upside or to the downside, as we go into the London session. And then there's that reversal that happens when the London market opens. Now, it's not always precisely when the London market opens. Sometimes it could be another hour or 2 or 3 afterwards, but we're looking for signs. We're looking for clues. That's what we want to do. This unfolds 1 bar at a time. And that's the critical mindset that you have to have here, is that don't be too quick to jump into a trade. You're going to get time, and the precise entry is based on the point and figure. So if you use these side by side, and you see videos where I have a bar chart on the left and I've got my point and figure on the right for the same currency pair, that's a really good idea. I'll show you how to do that in the membership course. I'm actually going to set you up with the same charts that I use to use point and figure. So here again, you see that you see that move, and on this candle right here, the last green candle or bullish candle, you can see the volume here, and this is obviously supply coming in at this point. That's what it looks like. And then things start to flatten out and go sideways for about 3 or 4 hours here, and you'll notice that, let me go ahead and open this up. At this point, I'm going to draw a resistance line in here. That's the stopping price action here at the start of the London Open, and then you get 1, 2, 3, 4, 5 candles that move sideways, and they don't go anywhere. But there is this slight upthrust right here on that candle 4 hours later, and again, relatively no volume at that point. I mean, things really died down quite a bit. So this is that divergence that I'm looking for, which is price in relation to the volume, and then also paying attention to some of these candles. So this wasn't one of those particular candle setups where I would see a strong moving bullish candle that doesn't really close too far away from that overall resistance level with a lot of volume. That's also some kind of an indicator that this could be a turning point. But in this case, this is a second version of looking for this reversal pattern here. And you can see the way these candles are moving around. Not a whole lot going on right there. This is a very different setup compared to what we did this morning with the pound dollar. Still, nevertheless, this is a turning point. This is a high, and this is where I want to get into my trade. So I'm looking for a reversal at this point. So again, once we've got this all set up here, we've got the high, we've got the resistance level, we're watching the candles, we see price moving through. Again, I talk about this quite a bit, that when I first started trading back in 2001, I joined a chat room, and these guys were not experienced. They had like maybe 8 months trading experience, and they admitted it. And they would immediately, when price would take out a high, they would scream buy euro dollar, and I would do it. I would just follow, because I was paying them $140 a month to join this chat room. I wanted their trades, so they would call out trades, and you can see what happened here. Price goes through that resistance level and then rolls right over, and I would get stopped out. And it was the most frustrating situation. That's where I experienced most of my losses, and I was down a lot of money. And, as a result of following their trade recommendations and this kind of behavior, which I refer to as head fakes. Other people refer to them as whipsaw or whiplash moves. But either way, it's just basically a head fake. It's a move in one direction and then the whole thing reverses, and it's bait. It gets people thinking that they missed this move here, and they start thinking, well, it's likely to break and it's going to continue because it's been in an uptrend for a little while here. And a lot of inexperienced traders just don't have the ability to sit it out and wait and say, I know what's going on here. This was my point and figure from this morning. This was that range of consolidation up there at resistance. So you get that move into the London Open, and then it starts to make this range of consolidation. At this point, what I need to do is wait for a column here to give me a sell opportunity to confirm this. So this gave me an entry here on the euro dollar at 1.2318. 1.2318. Now, where are my targets? This is why I rely heavily on point and figure, not only to get my entry, but also where is my target. This gave me a first target of 1.2265 and a second target of 1.2204. That's based on the data that I have here with the point and figure. I'm counting these columns and then calculating the overall high and then estimating where price is likely to go. Now, in this case, price went down as low as 64. This reads 1.2265, but the actual low, and of course this is point and figure, so that's why it's going to stop. The actual low was 1.2264 half was the actual low. So it stopped almost on the number here. The number being the first target. Point and figure is this accurate, but it's very important that you know how to set up your point and figure charts so that you can calculate and estimate how long do you hold onto the trade and where is your target. Because at this point, if it doesn't go to the second target, I have to lock in the profits. I'm not going to leave this as an open-ended trade with no stop or no target. I want to lock in profits from 18 to a target of 65. That's a decent trade here on the euro dollar. I wouldn't, first of all, expect the euro dollar to move as far as the pound dollar does. It can, it just isn't going to today. We can clearly see that. So I need to lock in profits here. When it hits that first target, I'm scaling out of this trade. I'm locking in the first half of my profits here, and then I'm setting the second half of the position at a break-even stop. So if price goes back up to where I got into that trade, minus a pip or two, right? So it would be, let's say, 23.16, 23.17, whatever the spread is with the broker that you're using, I would be stopped out at 0 on the second half of the trade, but I've locked in the profits from 18 to 65. I'm not going to be giving that back. So that's why it's critical that when you calculate these trades, these take profit levels on these trades, you have to lock in trades, or I'm sorry, you have to lock in profits along the way. So we're scaling out and we're trailing this. If it hits the first target, we're trailing it to the second target. If it doesn't and it turns around like it did today and goes back up and stops me at the break-even stop, then I just close the second half at 0. I haven't lost anything, but I keep and maintain the profits from the first half. So thank you for spending the time watching this video.